All right, good morning, everybody. We got PPI today. China's trying to do a little more stimulus. It still is just a splinter in my finger that they're considered an emerging market. Someday that'll change. Hong Kong down 1%. UK basically flat. Everything else is mildly down in comparison. Japan more than 0.5%. We're a market waiting, and with OPEX around the corner, FOMC, nations around the world cutting, some cutting faster than anticipated. We need to see a change in structure, and we just can't seem to get that change. If we don't get it soon, it's very likely that we're going to see them wash, right? They'll just throw up their hands, wash it, and then rip it, like we've seen them do countless times before. So we're going to get a little bit of jobs data. This isn't the big one. It's just a little bit of data. And any data connected to the jobs is important. Remember, the Fed has a dual mandate between inflation and employment. And when they considered the inflation fight over, they say they won that fight. They slayed the beast, and now their focus is on employment. So everything connected to employment, you want to pay attention to it. Once we're done with the morning, we're pretty much done with what we're going to see for the day. Got a couple of auctions, including the 30-year, which is another big one, at 1 o'clock. These auctions, they never show them as a high impact event, but I always pay attention to these auctions. Just watch the clock, right? It's one of the best indicators that you can have. Everybody's got one. It's free. Just keep your eye on the clock. You know, we go through all of these different websites and we look at all of the different economic events that are on the table, and this isn't all of them. You'll never get all of them. And you might be thinking, well, if it's not listed, it probably isn't important. And I'd argue against that. One of the biggest economic events that we get, it's quarterly, QRA, and you'll never see it listed on these websites. It won't be on your broker's list either. Thinkorswim, TradingView, IBKR, they all have something built into it that shows you the events for the day, just like this. And it won't have QRA on it either. And that's one of the biggest. It's bigger than FOMC. It's bigger than, triple witching and options expiration, and you won't see it. So you won't know every single economic event that could hit us today. And if you're new to trading and you're only focused on the US, just remember that most nations have the same events that we have. So not only do we have unemployment and non-farm payrolls, all that others, so do they, and rate cuts, and you're not going to get them all. But you can just watch the clock. Governments are lazy. They come out with events on the half hour, on the new hour. You'll get some weird stuff like Japan doing it, 10 minutes before a new hour, sometimes on the quarter hour. But most of the events are going to be on a new half hour candle or a new 1 hour candle. So just watch the clock. It's pretty simple. Once we're done with the 30-year auction at 1 o'clock, we're pretty much done with any events for the day. So if you're considering your 0-day trades, just be mindful of that 30-year, then you should be good today, good to go. I think I heard today that Trump's going to ring the bell at the New York Stock Exchange to open the market. There's been some talk about how it's going to fire up some bullish exuberance. I don't know about all that, but just be mindful, right? That this market is a market looking for a reason. It's really what it comes down to. And that it's still crazy bullish. The money flow just keeps coming in and coming in and coming in, and it's not stopping. If you read the Spot Gamma's founders report, and they show the options flows in things like the Mag 7 and the S&P and the QQQ, it's the money is just still coming in. So it's frothy, it's choppy, it's dangerous, and it just keeps going. Don't get in the way of it. Hop on the train or get the heck out of the way. So we're looking at the pivots for today. Today's daily floor pivot is higher than yesterday's. The channel is wider, implying that if we try to break out, it won't stick. We're back above the weekly pivot, but resting on it at this point. I wouldn't count it to be any sort of support or resistance. We're basically lined up with the week's VWAP, right? If you think about an anchored VWAP, this cyan one is from November. The yellow one is from December. Zoom in a little bit more. We've got this purple one is the start of the week. So that would be close to the halfback of yesterday. Yeah, lines up right on top of it, the purple line and the halfback. So you don't need to worry about marking that VWAP. Really, just mark your halfback. You're good. So we got a little bit of structure underneath this. We've also got yesterday's RTH open in between both of these two VWAPs. $60.75. Just adds to it, right? It's a lot of structure underneath this. We are maintaining underneath that VWAP. It's a nice little algorithmic play. Just biding our time until we get the data this morning. The ADR is at 51. Seems like we've stalled out and it's not getting any smaller. I don't know that it could get any smaller, really, if you think about it. 25 points higher or lower is pretty tight. At some point, we're going to come out of this and we're going to make a big move. We're not there yet. Because we're basically flat, we're slightly down on the day, so we're a little closer to the ADR on the bottom than we are on the top. But I wouldn't put much credence in that because we still got to get through the economic data at 8:30. We would have to break out of the RTH of yesterday for us to hit the ADR on either side, right? The RTH low, we'd have to break that to get to this, but it wouldn't be yesterday's low. It would just be yesterday's RTH low because we still have all this structure down here. I think we can get out of the RTH low easier than we can getting out of yesterday's low. I really think there's a lot of structure down here that we have to contend with. We can see that in the profile, either through this one or through the 5-day, 5-minute one that we'll check in a few minutes. So that 60.64 is the profile on the week, and you can see how ugly this profile is in relation to what we have back here, right? This is more of your cleaner profile. This pen is being a quitter lately. Probably need to give it a cookie. It's a nice clean profile, classic D shape with the point of control running through the center, or your 2D shape like we had last week, as opposed to what we have this week, which is just trash, right? It's all over the place. Distributive is what comes to mind. If we break through this structure, then it's likely we will revisit that 6018. We have two different profiles down at this level, one from that week there, and then from this week here. Doesn't seem like they're as worried about PPI as they are CPI. And I think mostly that's because the number itself isn't going to really affect anything today. The data inside the numbers are going to affect things by the end of the month when we get closer to some other decisions that have to be made. So they're going to need time to interpret it and make some decisions about its forward impact. And I think that's why we're not seeing that market maker move. Plus, with the contract change coming, I think they're just more focused on the fact that we're going to be rolling into that new series. The volume's picking up in there a little bit more. We've got twice as much volume today in that new contract than we had Monday at this time in that new contract. We're flirting with the volatility trigger. We have the put wall underneath us, and then the 10-day, the 3-week, the ATR, and then much farther down, 6058, we've got 0 gamma. If we continue to zoom out, got another options level at 6010. I don't think we're going to see that 6010 today, right? Just to be fair, it'd have to be something really negative. But we've got a lot of structure underneath this. All those anchored VWAPs are down in this same zone, same range. So we could fade down into it. Just don't really see how bad it would have to be to get us to cut through all of that and this structure from yesterday and continue lower. I think 6050 is a pretty solid spot. Key options level. Call wall is still in the same spot. I wouldn't be surprised if we gravitate up into that by the end of the week, like a pinning function. I know that's a concept that seems to have died out with more and more arbitrage programs and algorithmic trading and machine functions, but we still see it happen more often in the S&P anyways, as opposed to in other products. 10-day, 30-minute volume profile. This thing's kind of nasty too. It doesn't have your classic P shape or even the D shape. Got the profile across the top of the point of control. It's a really narrow range from the value area high to the value area low, and the point of control is sitting in the upper part of that zone. We are building out this lower structure around that 60-60 area. It's just above that 60-50 zone. So we could come back down and build into that more. That level, that level, that level. But we haven't even gotten to the point yet where we're going to take this volume off the table from that point of control. We're going to lose this volume first, which means this volume is going to be gone, at least a large part of it. What'll be left is whatever we built here. So when we're trying to figure out where's this point of control going to go, I don't think it's new home is being highlighted yet. We probably won't see it until starting maybe Tuesday of next week. By then, we'll have wiped out that much, and whatever we have left will really start pointing us in the direction of the new home for that point of control. Just kind of roll this forward a bit. We have to try to discern where we're going to get this new profile with this. So either we break out, get into a ceiling, set a new level above, or we break down, put in a deeper floor, start building out some volume at that level. We hit that VPOC during the economic news yesterday, ran right through it like it wasn't even there. We're just going to take that line and set it up here at yesterday's high. We ran up into the 1-day expected move range, and then we topped out. And really, that's where all the volume came in. So that's more of the classic P shape, even with this little minor bump down here, which I wouldn't really stress on that. That's your classic P with the point of control in the upper section. It's considered a bullish pattern. Just need to see it follow through, right? But what it does do in the near term is give us a ceiling that we got to focus on. We don't need to really try to put bias into it and suggest that it's going to be a resistance or anything like that. We can just use some fact and say with certainty, that's where the greatest amount of trading took place. That's not my opinion, right? So if we go back up to that level, maybe we can see a little bit of unfinished business or buyer's remorse. You can think of it from your own point of view. If this wasn't futures, but instead say it was equities, just some stock that you bought yesterday, if you got in there and 18 hours later, price comes back to your entry, what would you do with your trade? Maybe you would make an adjustment. It's just under 6,100, 6096. I would expect trading activity there. Whether that proves to be resistance or not, let's see. If we get close to it, I think we'll gravitate into it, right? It'll act a bit like a magnet. But then once we magnetize to it, we'll have a hard time getting away from it. Like yesterday, we got into that zone and really struggled to get beyond it. And that 6,100 is really where we capped out and just couldn't get away from that gravity until we went back the other direction. It kind of fits the old adage that, if they put in all that work and they're not getting any returns for all their work, then they'll stop doing it, pull out and go the other direction. So yesterday we talked about the weekly expected move and how if we get to the edge of the weekly expected move early in the week, it's worth taking a trade in the other direction. When I built that strategy, the issue that I kept coming up with is just because you think it's not going to fall anymore doesn't necessarily mean that it's going to rise either. So you have this conundrum between trying to sell some puts because you really don't think it's going to fall any lower and buying some calls on the idea that it could actually run up higher from there. The calls are where your highest amount of risk comes in. So the idea of selling the puts and buying the calls with that premium puts you in a position where maybe the calls don't work. But if you paid them off with the premiums from the puts, then it doesn't matter anyways. Still got 2 days left. We could make that 61.43. But if we get that close to 61.50, I think we would actually just go right on up and hit it. The thing is, because of OPEX, which is the third Friday of the month, this is only the second Friday. We got next week to go. But because of OPEX, I don't think we're going to get too far away from the pinning structure. Right, that call wall is likely going to hold all the way into OPEX. So even if we get above it, it's likely we come right back down to it. Just read the Spot Gamma's founders note, because they've been doing a really good job discussing that call wall and even the JP Morgan collar that's in there, which won't go away until the end of the year, right? They don't have this expiration in their collar. We're still 2% above the 10-week. Things are fine. This is exactly where you would want to be. It's still healthy, still bullish, still maintaining that distance from the 10. And we are still above the 10-day, not by much. And you can see how we got underneath it, came back above it. Now we're kind of fading back again. We're just dancing around that 10. And we are close enough now that it's acting like a gravity point or a magnet. We got to get away from it. So whether that's going to be from news or from a known economic event, we need the fuel to come in and drive us away from that 10. But with OPEX, it's really hard to see that coming. Plus, you know, I started today talking about the inflows and how this bullish market backdrop is still here. Money's not flowing into the index. We're just chopping sideways here, holding these highs, waiting for OPEX while money's everywhere else. And I know I like to day trade in the NASDAQ and the ES, but I think we're going to get another week of this. Yesterday was nice. It was a good gift, but that just got us really close to the call wall. So unless we want to run away from the call wall, like a move up like yesterday, but to the downside, that'd be a good trading day. Take that. So we got the China ADRs down about 0.5%. They're still up more than 4% on the week or within a week. That includes the YI, the yen, which is still up 8%. Bitcoin down, bonds down, gold miners, software, nat gas, all down. Airlines are up 0.25%, but a quarter isn't enough. We want more than that. So other than this micro FANG down volume being up more than 1%, we got nothing on the upside of note. IGV or IYW, either one. I like IGV if you're going to get more specific into software, but tech, software down, bonds, gold miners. I mean, we got nothing on the upside play. Even what we do see with transportation, these are just little algo prints. We're not seeing, coordinated flows in there. Emerging markets is up slightly, but that is contrarian to the K-Web that we see, which is down, because China is mostly dominant in the emerging markets, and K-Web is the China ADR ETF, internet ETF. So if one of those are up, the other one should be up, and that's not what we have. Well, other than that, we got nothing. So we want to see software really take some guidance here, maybe even get a little bit of some semiconductors. Otherwise, we're stuck with S&P and NASDAQ very likely pushing up into that call wall and stalling there and or fading back. We can get above the call wall, but when we think about from now into next Friday, not this Friday, but next Friday, if we're going to pin at that call wall 6111, if we get above it, we're just going to come back to it. But it'd be a radically boring week if we just pin at 6111 and we don't move more than 40 points between now and next Friday. So I look at the S&P names that are down more than 0.5%. Meta, Adobe, which had earnings, Broadcom, which is in the NY Fang group, NVIDIA. We need that group for like a rising tide scenario. And for the NASDAQ names that are down more than 0.5%, Facebook again, NVIDIA, Qualcomm, Broadcom, ASML, a lot of semiconductors in there. We need that to turn around. They don't have to get bullish and rally, stop falling first, and even just maybe get back to 0 second. That'd really help out. Wouldn't have such a negative pressure on the market. We could get a play on crude, USO or otherwise, trying to get a breakout of yesterday's range right now. It's been 3 days of running right back up to the top of this structure. So now maybe we stall out, flip back. We did get a breakout over the trend line if we had a trend line there. So keep it or break it. If we get back under 70, we could get a nice run in that. Just trying to look for something other than the ES and the NASDAQ, if that's not what is going to give us an opportunity, right? For gold, we had that half back, which I really thought was going to hold us back, but we were able to get through it. Now we're back to the top. This is like a little mini cup. So when you get a cup, you got to look, are we going to get a handle on this thing, or is it just going to be a cup and then we continue on? So we started to fade back through yesterday's levels. Got your half back on that too. If we hold the half back of yesterday, then we could rebound off of that half, maybe retest the high. If not, then, looking more of how oil looked, where we were just building this structure sideways. See if we can get that breakdown and breakout. Gold or oil, give us a you know, more opportunity if the ES and the NASDAQ aren't going to do anything. Seen some moves yesterday in the financial space. It's kind of generic and broad XLF to say the financials because it's insurance, it's trading desks, all kinds of things jumbled up in there. Could be worth watching the financials today, see if we start to get a breakdown in some of the big banks and big names over there. That might be a tell for the ES, which could bleed over into the NASDAQ anyways, once we start seeing the flows. So watch the clock, wait for the data to come in. Remember, we could get a gap play today, and I'm not talking about price, but liquidity. So at 8:30, we're going to get economic data. Mark that open. We still have one from yesterday that didn't close. So if we do start fading to the downside, that's a level worth keeping an eye on too. It's the 8:30 print from yesterday, and then the one that we're going to get today at 8:30. Looks like somebody already knows something. Still need to get it printed. So watch the clock, 30-year at 1. Be careful, be safe. I'll see y'all tomorrow.